CEO of Sound Planning Group. David, good to have you back. Good to see you. So what's your big takeaway from today's PCE report?
Well, I think that we saw a, pretty benign report as far as the headlines are concerned. Obviously, the market's rallying right now because we didn't see any, big surprises. But Alicia, as we talk about when these come out, we need to be aware of something, and that is this. They give us this headline number, and the market tends to rally, but then there's revisions in the month following and the month following that. And so perhaps numbers are not nearly as good as where they, seem to be right now. And so ultimately, that's a big concern here. I don't think the Fed's really changing any of their trajectory or anything else based upon what's going on. So this is basically a nothing conversation, and we'll see what ultimately happens next week when the Fed comes out and gives us some guidance.
That's the big question. A lot of us have our eyes on it. So just given this initial report, let's just look at the initial report before it's revised. It looks like inflation is easing, getting closer to the Fed's 2% target, which might lead to that interest rate cut in September. At least that's what we're hoping for. It's looking better than it used to look. Personal income only grew by 0.2%. That is less than expected. Spending went up by 0.3% as forecasted, showing people are spending more but saving less. I mean, it's not because income is rising much, right? People are still feeling the high prices. And let's also factor in yesterday's GDP report. It showed economic growth, right? The economy grew. And a key detail that many overlooked yesterday is that government spending played a big role, even surpassing consumer spending, despite huge annual deficits, right, to the tune of $2 trillion or close to it. So, David, should we celebrate, or should we at least be pleased with yesterday's GDP report? I see you shaking your head, and today's inflation update.
Well, there's not a lot of stations right now that are bringing up some of the points you just made. When you back out government spending from our GDP, of course, that is what our country produces. This is supposed to be our economic health. We're negative when you back out government spending. When you look at just even, the consumer spending right now and you back out inflation, guess what? We may be spending more money, but we're buying fewer units. Therefore, we are actually negative on consumer spending. If the consumer is 70% of our economy and their overall health is going to be what drives us forward into the future, this is a place for cause and concern, especially as unemployment is getting weaker, as we are seeing, 1.5 million jobs lost here just in the first 6 months of this year, and of course an over-reporting of 730,000 jobs last year through this Fed. So, this organization is not exactly telling us the truth. I think the numbers are cooked. This is an election year, and so take these numbers with a grain of salt.
Okay, but compared to the 9.1% inflation we saw last year, this is better. You have to admit that, yes, in terms of inflation.
Yes. Absolutely.
But will we see these prices go down for groceries and gas?
No, and in fact, there's a lot of misunderstanding right now about inflation. So inflation is going up at a slower pace than the 9% you just cited. But I think that actually inflation is still here to stay, and it's going to be really, really sticky as we continue to progress forward. Why? Because we're printing $2 trillion a year. That print and spend politics literally is a contributor to inflation. And by the way, inflation is another way to say, in my personal favorite reference, is this is the tax that no one voted for, and ultimately it is taxing our economy, it's taxing our dollar, and we're seeing those prices reflected in gold and silver and oil and so many other things that are continuing to inflate right now. So it's sticky. It's not coming down anytime soon. All
right, we'll see what the Fed does next week. We'll remain hopeful. Leave it on a positive note.
Yes, sir.
David Stryzewski, CEO of Sound Planning Group. Thanks for your time today, as always.
Appreciate you. Thank you.